Dr. Lal Pathlabs is the next company that we're going to be speaking to. The stock's up 7%, so it's bucking the trend, literally, with the market down and Lal Pathlabs up very, very strongly. They reported an inline performance in the fourth quarter. Margins have improved, realizations are steady, while test volumes have increased on a year-on-year basis. Dr. Manchanda is Managing Director at Dr. Lal Pathlabs. He's joining us now to take some questions. Dr. Manchanda, good morning. Good to have you with us here. Thank you for your time, as always. Prashant this side. Could you sort of tell us two things to begin this conversation with, Dr. Manchanda? One, for FY25, what are revenue and margin sort of expectations? What are you aiming for? And two, the SwasthFit project, I think that is done better than what everyone was expecting. Bundled testing is doing much better than what everybody was expecting. You've been sort of guiding the market to for that to get to about 25% of your total. What's the opportunity there? Can you bundle more tests, more on the specialized testing bit, etc., which can lead to sort of a faster volume and volume impact for you?
Good morning. Let me take your second question first. I think we are seeing very healthy sort of trends on SwasthFit. Primary reason for that is basically is a value for virtually all stakeholders. I would start first with the patients. They see a greater value for money because individual test pricing is pretty high. And if you club them together, they actually see a greater value. It's also a value for medical fraternity because in one go, they are able to test a lot of tests without affecting the affordability part of it. And they are able to make decisions very quickly, which normally used to get prescribed sequentially. Now it's actually all in one go. Operationally, also for us, it's a great value because it just simplifies our operations. Cost of doing additional tests is not that high, so margin impact is also not that much. I think it's a great value for all stakeholders, and that is one of the reasons why these tests are going up. And on the other side,
Dr. Manchanda, so sorry, this can now go, this has increased. What's the share now? And this can go up to, I think you're saying between to 30 and 40%?
See, currently last quarter we did about 24%. And I think one trend we need to observe is the consumer behavior because a lot of screening is happening. People are going for preventive checks. So this definitely can go up. Initially, we did not think about this kind of contribution coming in that sharply. But I think as we go down the pop setup, my sense is going to grow further.
And more specialized testings, etc., can also be bundled, or, I mean, you've reached the limits of bundling from your offering?
These are two completely distinct segments. The routine tests actually fall in NCDs as well as screening, but the high-end testing is more specialized, illness-driven. I think those kind of things will only happen once the patient actually is in serious needs of these kind of tests. So I don't think they would get clubbed together, but they will be two different segments.
And margins are on the SwasthFit portfolio, I mean the business, that segment, and other rest is all similar, better?
Yeah, it really doesn't impact the margin either favorably or unfavorably. I would say they are very similar.
And it's just a volume push in that sense. It's value for money, so it's kind of easier to sell it to the customer.
Yeah. It's everybody just loves this whole sort of format.
Okay, all right. Good morning, Dr. Manchanda, and congratulations on a solid showing. In the last couple of sessions, the stock is up more than 10%, telling you the street is appreciating these numbers that you've given. Give us a few details about the way ahead, though. For FY25, what kind of a growth can you guide us? And I understand that the focus is going to be more on volumes. Pricing, I believe you want to keep it more or less stable. So give us some clarity on that front. And also, you're looking at, penetrating into the tier 3 and tier 4 cities as well. So what is the strategy on that front? How much do you want that to constitute as a percentage of your business?
See, for FY25, we are exiting the last year on a sort of a confident note. If you look at our Q4 numbers, they are relatively better than what we have done on an annual basis. That too also on a base of high price increase last year. We were all a little anxious about what will happen this quarter because we took price increase last year. Despite that, I think 11.1% growth is a pretty healthy growth for us in Q4. And we are very confident of beating this growth on an annual basis as we go forward. And as of now, the plan is not to take any price increase. As far as tier 3, tier 4 strategy is concerned, we have been stating in the past that in our core markets, now we need to go deeper. and markets like UP, Bihar, and eastern part of India, we are well placed to go deeper in pop strata.
All right, Dr. Manchanda, just to clear the air. So for this year, FY25, we look at double-digit revenue growth with margins holding at around this 26% mark. Will that be a fair estimate?
It's a little early for me to say firmly yes, but we are very confident that we should be moving in that direction.
So that will be the aspiration then?
Yes, yes.
And you gave us a fair color on Swashfit, which is around 24% now. Indications are that maybe in the next couple of years, it moves closer to around 30%. Would that be an aspiration as well?
I really won't go with this number of 30, but I think we are seeing a sort of rising trend. But I would definitely feel that the trend will definitely be rising. But is it 30 or lower? I don't know right now. But I think 24% definitely will be higher than that.
Okay. Mr. Manchanda, good morning. Actually, you've answered a lot of our questions. So let me get some more stuff out of the way. On Suburban, I wanted to know what were the exit margins like for FY24? What is the kind of growth that you're looking at for Suburban in FY25 as well as the margins?
So Suburban for us, fortunately, Q4 was much better quarter than the earlier quarters. The margin that we have had in Q4 definitely are not representative for the year. Though we did about nearly 17%, but on an annual basis, I would say about 12-13% is sustainable margin for this organization, this company. Going forward, we are trying to build our network of collection centers in Mumbai as well as rest of Maharashtra. Suburban enjoys a great franchise in this state, and we would continue to drive growth under this umbrella.
So you said 17% margins is what you exited in FY24, but you're confident of just 12 to 13% sustainable margins. Why is that? Is that because competition is rising?
Let me correct you. Q4 margin is 17, but annual margin is 12.
Okay, okay. So for Q4, it's 17, and annually you did 12%, and that's something that is sustainable.
Yeah, that's what we want to sustain. Yeah.
Got it, got it. In terms of key metrics like realization per patient, per test, volume growth, etc., what are we looking at?
So I think overall, what we are seeing is a lot of interplay between volume growth, which is usually a footfall, patient footfall, and the number of tests that we do. So we plan to actually look at both these metrics together. I think our sample growth is pretty good, which is primarily being driven by higher contribution of Swasthfit, and we will continue to drive tests per patient growth as much as possible.
Okay. In terms of, I mean, since we're talking about Swasthfit and all of that, you still have about 850 crores of cash on your books. How do you plan to utilize that? Any areas that you're looking to invest into via the acquisition route? And if yes, anything in this calendar year or next that we can expect?
We actually will follow a balanced approach of using this cash. One is, of course, dividend payout that we've been doing regularly. We also are investing in our own infra expansion in terms of labs. And third, of course, is definitely we are on the lookout for good strategic acquisitions. And the reasons are South and West India. Right now, I don't have anything to share, but last acquisition that we did was Suburban. And we will continue to look for such assets in future as well.
Dr. Manchanda, one last question. From a competitive intensity perspective, is all settled down now? No predatory pricing as such?
Intensity still continues to be in terms of number of players in the market, but I think that predatory pricing or deep discounting and all that actually is easing off. So I think I would say on the pricing front, is competition less, but relatively, of course, number of players are still there.
All right, Dr. Manchanda, we'll leave it there. Thank you very much for joining us. It's a pleasure, and thank you very much for being with us.